So are people still chasing the dips, Gunjan?
It looks like they are. Buy the dip, one of the most popular strategies of the past few years, and even since the last financial crisis, has retained its popularity this year during this month-long sell-off that has now dragged the S&P 500 down more than 20%. Individual investors do seem to be hanging on. They do seem to be buying more when the S&P 500 declines than when it's rising, though many are being tested by this incredible downturn, and it's been painful, to say the least.
Well, it certainly has been. I mean, I think people got accustomed to, or maybe spoiled by, the idea that whenever the stock market went down temporarily, it was pretty soon going to, over the last decade, it was pretty soon going to snap back and then go higher than it was, then maybe come down, then it was going to go higher than it was. That works until it doesn't. And right now, it doesn't seem to be working because the steps are not going higher. The steps seem to be going lower as we broke last week through those June lows.
That's right. It's been the worst year for buying the stock market dip since 1931, the second worst year on record. And look, the past few years, it kind of just seemed like stocks would keep going up and up and up. And so many people just felt really rich, right? Because they did buy on those dips. Then the stock market shot up immediately. And one individual investor I spoke with said, look, I got greedy. I thought it would be so easy to turn my brokerage account into a 100K brokerage account. I thought I'd be able to pay for my daughter's college education through the stock market, shielding them from loans, because it just seems so easy for a few years. And that has not been the environment at all. And I think just zooming out, this shows you how much the market has changed this year with higher bond yields and tumbling stock prices.
I just heard from a source this weekend, the same thing. Looking at these historic inflows of equities, and especially these retail investors, non-professionals going in and buying the dips. But conventional wisdom, as Tyler pointed out, is what they're going by. They watch CNBC all day. This has been the message that they're hearing. Are you starting to see cracks in the theories that there might be some room for some nervousness over the stock market and where it's heading?
There's definitely a lot of nervousness out there, especially among the individual investors I spoke with. And many realized, look, these trades that I piled into, for example, day trading, buying the ARK Innovation ETF, a lot of those trades that worked the past 2 years are no longer working. So even though we are seeing individual investors, buy the dip to some degree this year, that doesn't mean they're not anxious about it. That doesn't mean there hasn't been other shifts in behavior. For example, intraday trading among individual investors recently hit the lowest level since January 2020, before the onset of the pandemic that drew millions of new investors into markets.
We just showed the inflows into the people piling into the ARK. Net inflows into equity funds are actually up. For much of the rising times in the market, the inflows were actually negative. They weren't inflows. They were. And I wish Ron and Sana were here. Maybe you know it, Gunjan, as well. But remember, I happily only remember a very little part of this. Between 1929, when the market cracked in 1929, it did not get above its pre-crash high for something like 20 years, until 1954 or something like that. Was the year I was born. So I'm telling you, these downturns can last a long, long time, and it is not necessarily a given that the market is going to go back and take out the all-time high that we set at the first of this year. Just saying.
It seems downright impossible to say right now and to even predict right now. But I think that is one big shift this year, right? Where suddenly investors have somewhere else to place their cash. Take a look at the 2-year Treasury yield, the 10-year Treasury yield, right? Like ultra-safe government bonds look attractive for the first time in years. Real yields are edging higher. So it really puts a dent in that TINA trade that carried markets the past few years. So no one knows how long this sell-off is going to last, but one thing is for sure, it's incredibly different from other sell-offs that we've had in recent years.